Good evening, and welcome to tonight's critical discussion. We delve into a question fundamental to our economic and social fabric. Is a progressive income tax system genuinely superior to a flat tax system? To unravel this complex issue, we are joined by two distinguished experts. Professor Alistair Finch, who will champion the merits of progressive taxation, and Ms. Isabella Rossi, who will advocate for the advantages of a flat tax. We anticipate a robust and insightful exchange of ideas this evening.
Thank you, Dr. Vance. A progressive income tax system, at its core, is predicated on the eminently reasonable principle of ability to pay. This means that as an individual's income increases, the percentage of that income paid in tax also increases, but crucially, only on the portion of income falling into higher brackets. It's not about taxing all income at a higher rate, but applying incrementally higher rates to higher levels of earnings. This structure is inherently fairer and more equitable because it acknowledges that the marginal utility of a pound is different for someone earning £30,000 a year compared to someone earning £3 million. Losing 10% of income has a far more significant impact on the former than the latter. Furthermore, progressive taxation is the bedrock upon which we fund essential public services that benefit everyone in society. Our healthcare system, our educational institutions, critical infrastructure projects, and vital social safety nets. These are not luxuries. They are the hallmarks of a civilized and prosperous nation, ensuring a baseline standard of living and opportunity for all citizens. By asking those with greater resources to contribute a proportionally larger share, we can collectively invest in these public goods without placing an undue burden on those with less capacity. This system also plays a crucial role in mitigating excessive income inequality, a phenomenon that numerous studies have linked to social instability and reduced overall economic well-being. It's important to dispel the myth that progressive taxation is about punishing success or penalizing wealth creation. On the contrary, it is about recognizing that significant wealth is often built upon the foundations of a stable society, an educated workforce, and robust infrastructure, all of which are sustained by public investment. It is about a shared responsibility and a collective commitment to the common good, ensuring that the benefits of economic progress are more broadly distributed.
Thank you, Dr. Vance. While Professor Finch eloquently defends the progressive model, I contend that a flat tax system offers a more compelling path towards fairness, simplicity, and economic dynamism. A flat tax, in its most common form, applies a single, uniform tax rate to all income above a specified personal allowance or exemption. This exemption ensures that low-income earners are protected, often paying no income tax at all, thereby addressing concerns about regressivity from the outset. The primary argument for its fairness rests on the principle of equal treatment. Every pound earned above the exemption is taxed at the same rate, regardless of who earns it. This eliminates the discriminatory nature of progressive systems, which effectively penalize individuals for earning more by subjecting them to increasingly higher marginal rates. The transparency and simplicity of a flat tax are undeniable. Imagine a tax code that could fit on a postcard, as some proponents have famously suggested. This radical simplification would drastically reduce compliance costs for individuals and businesses alike, freeing up billions of pounds currently wasted on navigating complex tax laws and employing armies of accountants and lawyers. Furthermore, a flat tax is a powerful stimulant for economic growth. By removing punitive, high marginal rates, it strengthens incentives to work, save, and invest. Entrepreneurs are more likely to take risks and expand their businesses if they know they will retain a larger portion of their success. High earners are less incentivized to engage in unproductive tax avoidance schemes or to move their capital to lower tax jurisdictions. The result is a more vibrant, competitive economy that generates more wealth and, consequently, a broader tax base, even with a lower single rate. This isn't about letting the rich off the hook. It's about creating a system that fosters prosperity for everyone by making the tax code fair, simple, and conducive to economic activity.
Ms. Rossi paints an alluring picture of simplicity with the flat tax, but I believe this simplicity masks some rather inconvenient truths and potential hardships. While a zero tax threshold for the lowest earners is a common feature, the burden of a single rate, even a seemingly modest one, can still fall disproportionately heavily on those just above that threshold. The marginal impact of, say, a 20% tax rate is far more acute for an individual earning just enough to exceed the allowance than for someone earning substantially more. The claim that progressive taxes inherently stifle economic growth is also a recurring assertion that doesn't always hold up to empirical scrutiny. Many developed nations with robust progressive tax systems have enjoyed sustained periods of economic prosperity and innovation. Correlation is not causation, and often other factors are far more determinant. Indeed, the public investments in education, research, and infrastructure funded by progressive taxation can be powerful drivers of long-term economic growth themselves. We must also address the fundamental issue of wealth concentration. Unchecked, it can lead to an imbalance of economic and political power, undermining democratic principles and social cohesion. A progressive system is a vital tool to counteract this tendency, ensuring a more equitable distribution of societal resources and opportunities. Moreover, a well-designed progressive system is not necessarily the labyrinthine monster it's often portrayed to be. It can be structured with clear brackets and deductions that are understandable, while still achieving its equity goals.
Professor Finch raises valid points about protecting the vulnerable. But the design of a flat tax, particularly the level of the personal allowance, is crucial and can be set generously. If the allowance is substantial, a significant portion of the lower income population pays no income tax, effectively creating a highly progressive outcome at the lower end of the income scale. My concern with highly progressive systems lies in their inherent complexity and the fertile ground they create for loopholes, deductions, and credits that disproportionately benefit those who can afford sophisticated tax advice. This often results in a system that is progressive in theory, but far less so in practice, breeding resentment and a sense of unfairness among ordinary taxpayers who lack such avenues for tax mitigation. Furthermore, the disincentive effects of very high marginal tax rates cannot be dismissed lightly. When individuals face rates of 50%, 60%, or even higher on additional earnings, the motivation to undertake extra work, pursue promotions, or engage in entrepreneurial risk-taking is undeniably diminished. This isn't merely theoretical. We see evidence of behavioral responses to high taxation, including reduced labor supply among high earners, or relocation of businesses and talent. A flat tax, by contrast, maintains a consistent and predictable incentive structure across all income levels above the allowance, fostering the economic dynamism that ultimately benefits society as a whole through job creation and increased overall prosperity.
Professor Finch, Ms. Rossi argues that high marginal rates in progressive systems can discourage high earners and investors, potentially leading to capital flight or reduced economic dynamism. How can a progressive framework mitigate such risks while preserving its core principles of equity?
A valid concern, Dr. Vance. However, the disincentive argument is often exaggerated. Progressive systems aim for optimal, not confiscatory, tax rates, balancing revenue needs with economic impact. Many successful economies maintain progressive taxes, indicating that factors like stability, skilled labor, and quality of life are paramount for investment and talent retention, often outweighing marginal tax rates alone. Furthermore, intrinsic motivations beyond net income, such as professional challenge and societal contribution, also drive high earners. Mitigation strategies include sensible indexing of tax brackets, fair capital gains taxation, and maintaining a predictable, stable tax policy environment to foster confidence.
Ms. Rossi, progressive tax advocates stress its role in funding essential public services and safety nets. How would a flat tax system, potentially reducing revenue from top earners, ensure these services remain adequately funded And how would it avoid disproportionately impacting those who depend on these services?
Dr. Vance, a flat tax doesn't inherently mean less public funding. The aim is fairer, more efficient taxation that can broaden the tax base through economic growth. Increased employment and investment under a flat tax can yield robust revenues, potentially matching or exceeding those from complex progressive systems prone to avoidance. Crucially, this must be paired with greater government spending efficiency, ensuring every pound of taxpayer money is used effectively to fund necessary services. A significant personal allowance shields low earners, and the economic opportunities created by a dynamic economy can lessen reliance on safety nets, benefiting everyone.
In closing, I urge us to remember the foundational principles underpinning progressive taxation. It is, at its heart, a system built on fairness, the simple, intuitive idea that those with a greater capacity to contribute should do so proportionally. This isn't about penalizing success, but about acknowledging a shared responsibility for the society that enables that success. We've discussed its crucial role in substantially reducing income and wealth inequality, which is not merely an abstract economic concept, but a factor with profound implications for social cohesion, health outcomes, and equal opportunity. A society that allows vast disparities to grow unchecked risks its stability and the well-being of many of its citizens. Furthermore, progressive taxation provides the robust and sustainable funding necessary for the high-quality public services that define an advanced, caring society, from education and health care to infrastructure and environmental protection. These are investments in our collective future, investments that a flat tax system, with its inherent limitations on revenue generation from the wealthiest, would struggle to adequately support without placing undue burdens elsewhere. A well-structured progressive tax system is not an impediment to economic prosperity. Rather, it is a cornerstone of a just, equitable, and thriving society that invests in all its people and ensures that the benefits of economic progress are widely shared. It reflects a commitment to community and mutual support, values I believe are essential for long-term societal advancement and stability.
As we conclude, I want to re-emphasize the compelling advantages of a flat tax system: its inherent simplicity, its fundamental fairness in application, and its proven potential as a powerful economic stimulant. Simplicity in taxation is not a trivial matter. It translates into tangible benefits, reduced compliance costs, less bureaucracy, and a tax code that ordinary citizens can actually understand. This transparency fosters trust and reduces the scope for the kind of strategic tax avoidance that complex progressive systems often inadvertently encourage among the well-advised. The fairness of a flat tax lies in its equal treatment of every earned pound above a generous personal allowance, respecting individual effort and success without imposing punitive higher rates that can stifle ambition. This system champions individual liberty and economic freedom, allowing people to keep more of what they earn, thereby empowering them to save, invest, and spend as they see fit, driving consumer demand and capital formation. The economic dynamism unleashed by a flat tax, through enhanced incentives for work, entrepreneurship, and investment, leads to a stronger, more competitive economy, ultimately benefiting everyone through more jobs and greater prosperity. A flat tax fosters a culture of growth and opportunity, rather than one of redistribution that can dampen aspiration. It is a forward-looking system designed for a prosperous and efficient society, where individual achievement is rewarded, not progressively penalized.
Professor Alistair Finch, Ms. Isabella Rossi, thank you both for your exceptionally articulate and well-reasoned contributions to this complex debate. Tonight we've explored the profound tension between the pursuit of social equity and comprehensive public support, championed by progressive taxation, and the drive for simplicity, individual incentive, and economic growth, advocated by flat tax proponents. We sincerely hope this discussion has provided our audience with valuable insights and encouraged continued reflection on these critical issues. Thank you for joining us. Good evening.